This conference will now be recorded.
So everyone are out of festival mood. So you all know that we are going to wind up the course within 2 sessions. So today and day after tomorrow we'll be having a session. So today will be the last session on the concepts, and day after tomorrow you are going to have a revision. So any kind of doubts, if you have it, so you can be able to claim it on that day and you can be able to get cleared. So, or in case if you want to know something, so you can ask the questions today also. And your final exam, it has been already been announced. It was been announced for today, but due to not finishing up the course, so we have to postpone it to the Monday 9th. Yes, Asha, I think you are having some questions.
Yes, sir. Sir, I wanted to ask if the final exam also will be similar to the test we took up recently.
It is a similar kind. It is similar kind.
Yes, sir.
Okay.
Thank you, sir.
So yeah. So in the previous test, what we had been taken, it was in the Google form. So now what you are going to take up, it will be through an NICT app, and I hope everyone were able to open it up. The login were working out. So is there anyone who is having any issues? Is that everyone were able to log in? So type it as yes on the chat box so that I can get confirmation that everything is fine. Yeah, thank you for the responses.
Excuse me, sir.
Yeah, go ahead, Dash.
Sir, another question. So,
Yeah,
for how many minutes will we be writing the test for?
so I think you will be having a countdown timer on that exam screen itself. So maximum it is up to 1 hour.
Okay, sir. Thank
Yeah, and it is being scheduled at 6 o'clock.
you. Yes, sir.
Yeah, so six to
And
seven
the
you can
mark?
be able to finish. The marks you will be able to get it once after finishing up your exams. So it will be shared with your coordinators. So they will
Yes.
let you know on all those details.
Okay, sir.
Okay, thank you. Is there anyone else who has any kind of questions? So if you have any kind of queries, you can be able to raise it. So today, the next Friday, we have it someone online. Umayma, you have any questions? Okay, it was a by mistake. Okay, so fine. I'll just give you people kind of a small practical test so they can be able to just go ahead with the financial statements what we have been discussed. So it is a small test on that part. So it is called as financial statement analysis. So where it will involve all the three details so that you can just try to find it what could be the values. I'll just share it. So is that my screen is visible to you people?
No, sir.
Okay, I'll just reshare. Just give me a minute. So hope the screen is visible now.
It's visible, sir.
Yeah, okay, fine. So just read out with all this values. I'll do one thing. I'll share this document to you people on the WhatsApp. So even that it will be more better than seeing only over here. Give me a minute. Okay. So hope can you check it out on the WhatsApp, the information, the
Receive it, sir.
okay. Please open it and check it out and let me know the answer so that I can be able to do it on behalf of you people. So if anyone is online who can be able to give take a access and do it online, so even that also will be okay. So is there anyone who is logged in with their laptop? So type it as yes in case yes. In case if you are not been logged in with laptop, you're logged in with mobile, type it as mobile. Okay, fine. So let me know, how do we bring up all these values? So since you people have been already been done with all these statements, so it is just a revision kind. So read out the question and let me know the answers. I'll just give a 5 minutes of time. So meanwhile, just have a look on all the questions, what you are able to see it over there, and you can answer me one by one. Okay, so it's been timed up. So is there anyone who can start up with? So either it is a right or wrong. I want every person to participate in this discussion. So if one person starts, definitely there will be an inspiration. So the other students also will follow with that. So I want anyone to take an initiative and start up with. It's been very long gap, I feel.
Sir, is
It,
sales 65,000?
yeah,
That is the total.
yeah. So let's see the question. It is ABC is an high-end restaurant which started up operations on 1st Jan 2019. Following transactions occurred in that year. So capital introduced rupees 10 lakhs. So let us go with one by one transaction so that it could be help us to know that how we can be able to feed up with the values. So sales value, what you said, it is a 65 lakhs. Yes, my it is a 65 lakhs. So let me know that one by one. So capital introduced rupees 10 lakh on 1119. So where do this value will get affected? See, as we all know that every transaction should be affected in two ways. One should be in receiving and one should be in the giving. So as we know that one should be debited and one should be credited. So let me know the value where it is going to get affected. So please go to the first transaction. Capital introduced rupees 10 lakh. So where does this amount will remain? So where does the equity capital it is going to get affected? Please have a look on the all the statements, income statement, balance sheet, cash flow statements, and let me know this transaction will affect in which all the places. So can anyone try? I think it is easy. Just if you are going to put an eye on the screen, what you are able to see it. So in that itself, you have an answer. So when you bring in capital to the business, so to which statement it is going to get affected? Is it income statement? Is it a balance sheet or cash flow statement? So at least you can try with that. Which statement it will affect?
Sir, is it
Yeah.
balance sheet and cash flow?
Yes. So equity capital is nothing but the capital introduced by the owner. So let me put the value equity capital. So it is 10 lakhs. Okay. So now we also should see that it is going to get affected to the other point of values also. So the 10 lakh it has come as a capital. So what is the other effect So where it is going to get affected with this value? So equity capital is coming in what form? Whenever we receive a money to the business, so we are going to receive it in the two ways. One is cash basis, in the form of cash or in the form of bank. So how this amount has been received as per this transaction? Is it a cash or bank? Is that the amount has been received as a cash or a bank? The equity capital has come in the form of, at least you people can tell me either this or that. Either it is a right or wrong, we can discuss. But I want someone has to give me the answer.
Sir, can you please repeat the question?
See, equity capital was been introduced into the business. So we have given the value in equity capital. So whenever the money is going to coming into the business, so it will have a double effect. So one effect we have it on equity capital. So where is the other effect it will have?
Sir, can it be bank?
So is there any bank information you have it, ma? Anything like check number, DD number, anything do you have it over here?
No, sir.
If not bank, then what could be that?
Then cash account, sir.
Then cash account, right? So where do we see that cash in this three statement? So where do we have that cash account? It's there in the balance sheet. On which side? Is it on the liability or on asset side? On the asset side, right? So here we have a multiple transactions which are related to cash at the bank. Okay, so most probably everything is on the cash. Okay, so for that reason, I've just given with a separate column for this purpose. So whatever the values it comes for the cash. So let us put the values over here separately, and this total value, let it be connected to this. So okay, so here I've been made it as sum of all these values. So let me put it equals to sum of whatever the values I put over here, let it calculate it, and this total value, let it be given over here equals to the total value. Okay, as soon as I enter the value over here, so it is to affect it to the balance sheet cash balance, right? Okay, so now whether this 10 lakh rupee which is introduced as a capital, whether the amount is coming inside the business or going out of the business. Is that cash is coming in or going out? If the cash is coming in, so the amount has to be entered in positive. If the cash is going out, then the amount should be represented in negative. So whether this value is a positive or negative value. Whether the cash over here, is it a positive or negative value? Anyone online? Okay, so the cash is coming into the business as an capital. So the amount will be in positive. Okay, so you can see that because of one value what I have entered on the cash balance, so this it has affected into the balance sheet. This is how you're going to link with the financial statements. When they are doing a calculation, it has to be reflected into the respective financial statements, right? Fine. So hope this has given a clue that how I want you people to do the calculations over here. Okay. So now, so we have been finished with the capital introduced rupees 10 lakh on 1119 transaction. So let us go to the transactions number 2. Fixed asset brought for rupees 5 lakh and depreciation is being made 20% based on straight line method. So what is the value we are going to enter and where it has to get affected?
Sir, depreciation and balance sheet will be recorded, sir. We have to subtract it from the capital.
Is it on the capital or on the fixed asset mark?
The fixed asset, sir.
Yeah, fine. So now we have to show the value both the fixed asset as well as depreciation. Okay, why we have to show both? Because if you have seen this statement, so can you read out this mark? The text what I have been selected.
Bill the income statement, balance sheet, and cash flow statement as on 31st December 2019.
Yes. So this statement, whatever we are preparing right now, it is at the end of the financial year. Okay. So when we are going to prepare this statement at the end of the financial year, so the value of an asset will not be the same. So what we are being at the time of purchase, so it will not be the same value. It will be depreciated. The value will get reduced. So as per the SLM, that is straight line method, so the 20% of the value has been reduced. So what we are supposed to do it is, so here we are supposed to bring it, okay, fixed asset. So equals to, what is the value of an asset? Over here we have brought it. It is, okay, it
Sir,
is
5
5. It is
fixed
5 lakhs,
asset.
right? Yeah, it is 5 lakhs. But since we are preparing this fixed asset, the value what we are going to calculate it in the end of the financial year. So this value will be reduced minus with whatever the depreciation value you are going to write. Okay. So let me keep it like this. So 5 lakh worth of fixed asset, it is there. and whether the fixed asset, whatever I bought, whether it was being brought on the credit basis or on the cash basis as per this entry. See, asset we purchased, I have to say that whether we are purchased on a credit basis or cash basis. By seeing this
Sir,
sentence, yeah,
for cash, sir, it is just said that bought
yeah.
rupees 5 lakh.
So it will affect
I,
into cash, right? So we have to pay the cash. So when you pay the cash, the amount it will be shown in negative balance. So I'll show in the cash minus 5 lakhs. Okay. So with this, also I have to specify that at the end of the year, the depreciation value, it has to get reduced. So how it will get reduced means, so equals to the asset value is how much? 5 lakh into 20%. So this comes up to 1 lakh. Okay. Is that understood? Please type it as yes, so
yes,
that I
sir.
can, yeah, that's good, ma'am. So I have been linked this value to the fixed asset. So the fixed asset value at the year end, it is going to be 4 lakhs. Okay. So here the profit value, whatever we are going to get it. Okay. So let me let me not do any calculations over here. Let it be blank over here as of now. Let us see with the transaction value, then we will see the total of value. Okay, fine. So the fixed asset value, it became 4 lakhs, and here it is minus 5 lakhs in the cash. The next thing is 5 waiters and an accountant were hired on 1/1/2019 at rupees 2,50,000 per month for the full year. So where does this get affected?
Sir, income statement, salary expenditure.
So in the income statement, salary expenditure. So let's see that what is the value of it, equals to 2,50,000. Yeah, 2,50,000 into, it
12,
said
sir.
that 12, that is full year they have made a payment. So the value is 30 lakhs. Okay, so since it has been set as they were hired, and this, whatever the amount is there, they have already paid for the full year. So whenever there is payment, so we are going to bring it, either it is on cash or bank. So since here there is no bank information, we are supposed to consider it as a cash payment. So whether the value should be added or it should be subtracted, positive or negative value.
Negative, sir.
Okay, so let me put it minus 30 lakh. Okay, the next transaction. Office rental of rupees 2,50,000 for full year paid. Okay, okay. Just give me a minute. Sorry for the inconvenience. Fine. So here we are able to see that the waiters and accountant were hired on. They were just hired. They were not being paid. Sorry. So it is only for the full year. It says that they have expenses of 30 lakhs, whereas we have an office rental of 2,50,000 per month, which is paid. So it is said that it is paid. Okay. So instead of this cash, whatever we have been reduced in the cash, so it is not related to the salary. So it is only the expenses it is shown like that, whereas the rental expenses it has been paid already. Okay, so let me take it 2,50,000 into 12, so that it comes to 30 lakhs. So this 30 lakhs we have been taken over here as a calculation. Okay, so it's not been said that the salary has been paid. It is just a taken. They were being hired, and the expenses what they have prepared it is 30 lakhs. Okay, so the next thing is food and beverages sold. So when we are saying it as in sales, so we have to take the value over here, the sales value, that is 65 lakhs. So the sales has happened with 65 lakhs. So when you are saying that there is a sales, so let me bring up the value that we have received, 65 lakhs. So since we have received, it is positive figure. So it is 65 lakhs. Okay.
Excuse me,
Yes, ma'am.
sir. For office rent, actually, it says 2,50,000 for full year. Uh,
Yeah.
then should we still take it as 2 lakhs, sir?
Yeah. Here, actually, that is what I'm checking out. There is 2,50,000. Let me change this value into for the full year. So 2,50,000 for the full year, because salary we cannot hold it for the whole year. Na? So let me take it as that 2,50,000 paid. Otherwise, it will be a problem to us. So we have to bring it 2,50,000 paid for the full year. Okay. So in that case, the salary expenses, whatever it is there, 30 lakhs. Okay, just a moment. Again, there is, if you take it in that way, like, can you repeat your question, ma?
Sir, actually, my question was office rental was rupees 2,50,000 for full year. It was given. So, shouldn't we take 2,50,000 instead of
We
30
should
lakhs for?
2 lakh. Yeah, yeah. So here, okay. I think here the sentence was been I've been taken in a wrong way. So whatever it was there before, let it be the same thing. So 2,50,000 per month. Yeah. So let me take it like this only. So salary paid as 30 lakhs and rental expenses actually it is totally 2,50,000 for full year. Yes, you are right, ma. Sorry. So let me put it the value as 2,50,000 and here let me assume it that I have been paid the 2,50,000 also over here. Good. Is that now correct, Asha? Is that was Asha?
Yes, sir.
Yeah. So now is that values are what you are saying? Is it right? Is there anywhere we have been?
I had a question with the sentence. Should we take it like for the whole year, or is the sentence incomplete or something like that?
No, no, no. It is for the whole year. We have to take it.
Yes, sir. Thanks.
Since we are going to prepare it at the end of the year, so here we are preparing it for the full year. So from 1st of Jan 2019 to 31st December 2019. So it's a 1 year value we are supposed to take.
Yes, sir.
Okay, fine. So can we see with the second, the next transaction? Yeah, just give me a 2 minutes of time. I'll be back. There is some issues over here. It's not getting edited. So I'll just recheck it out with the internet and I'll just get it back. Give me a 2 minutes. So hope the screen is visible. So the issue has been solved. Yeah. So let me take it. Yeah. So it was we were talking about the transaction food and beverage sold. It was 65 lakhs. So we have given the value in the sales, and we have been increased the sales cash value. So the next it was food and beverage items taken on credit worth rupees 20 lakhs during the year. Of this, rupees 3 lakh was unpaid at the end of year. Okay. So there was COGS, cost of goods sold. It was 20 lakhs. Yeah. So it was 20 lakhs. So it says that at the end of the year, so it was been unpaid. That means out of 20 lakh, it was paid 17 lakhs. Remaining 3 lakhs was unpaid at the end of the year. So where do we give it the value when you are not being paid? So in which statement do we give this information that we are having a credit value? So where do we have this value? Okay. So the unpaid value, it is going to be shown on the accounts payable. So let me give the value as 3 lakh. So which is unpaid. And when I say that I have been paid that 17 lakhs, so it is going to reduce my cash balance 17 lakhs. Okay. So 17 lakhs was being paid, 3 lakhs were being kept as credit, so which is unpaid. So the total purchase was happened, it was on 20 lakhs. Okay, fine. So the next thing is the 5-year membership scheme for rupees 2,50,000 each was offered. So they sold the 30 memberships in cash in 2019. Okay, so there is a sales has happened of a membership scheme, so which is each 2,50,000 into 30 people. But this 2,50,000, whatever we have it, so it has been mentioned as it's a 5 years membership. Okay, so if I take this value, it will become 75 lakhs. So which is not, this amount can be considered as this year income. Okay, so it is sales membership what we have been given, it is for 5 years. So this 5 years value, it is going to be divided. So divided by 5. So that means it comes up to every year at 15 lakhs as a revenue. Okay, so 15 lakh rupees. And The remaining amount, the 60 lakhs, 75 lakhs, let me give it 75 lakhs minus 15 lakhs. So this remains as unearned revenue. Okay. Whereas actually we have received a cash of rupees 75 lakhs in this year itself. Okay. So even though we are going to show it in our statement that in the income statement it is going to be this year income, we consider only what is applicable for this year. In the balance sheet we show that, so the remaining 60 lakhs, it is not a revenue of this year, it is going to be every year, it is going to be removed. But we have received a cash of 75 lakhs because of this sales, and it has been clearly specified that they sold 30 memberships in cash in 2019. So we have received that 70 lakhs as a cash value. Okay. So is that clear till here, everyone? So there is an effect of 75 lakhs in the asset side. The 75 lakhs on the other side, it is being split into two parts. One is 15 lakhs as the income statement value and 60 lakhs as a unearned revenue value on the balance sheet. Okay. So hope you people have got this. Is that clear? Please type it as clear. Hope everyone are there online. Yeah, thank you, Naomi. Fine. So the next transactions, what we see it is on 1/1/2019 rupees. Yeah, thank you, Asha. So on 1/1/2019 rupees 7 lakh was borrowed at rate of 8%. Out of this 3,50,000 was repaid on 20th 6 2019. So where the interest is paid for the full of year till 31st. Okay. So here the interest expense value. Okay. So let me see that the loan amount. So since it has been loan made on 1st of January at 7 lakh, in that the amount it is already paid at 3,50,000. So the remained loan amount over here it is 3,50,000. Okay. So let me bring it. The loan amount is remained as 3,50,000. And here it will be equals to 7 lakh minus 3,50,000. Okay, so this value we have been given over here, and here we have an interest expense where it will be equals to 7 lakh into 8%, so which comes up to 56,000, where in this minus 3,50,000, just a moment, 3,50,000 into 8%, 4%. Yeah. So the amount it is going to come at 42,000. Okay. Why it is like this? So you know that the 7 lakh was the amount what we borrowed from them, and the interest it has been paid. Okay. So of 8% minus the amount we have already paid, 3,50,000. So on the remaining amount, it is going to be the half of the percentage. It is going to be calculated. So that is on 8%, the half amount is half percentage is 4%. So this is what the value of that year, the interest expenses. Okay. And this 42,000, it has been paid. Minus 42,000. Yes. Now, the next thing is, so let's see, income statement is that everything is being completed, anything is left out. So everything is calculated. So let me sum it up. Okay. So sum of the sales value minus the COGS and the OPEX values. So let me sum it up with this. So it comes to 26 lakh 8,000. Okay. So here you should also see that the last transaction talks about on 31st December 2019, that is at the end of the year, half of the net income was being distributed to dividends as the dividends to the shareholders. So this profit, whatever we have it, it is not our money. So this it is going to be paid. So that is dividends paid. It will be equals to this value into 50%. So it comes to 13 lakh 4,000. So finally, net income after dividend paid is equals to profit minus dividend paid value, and this value is to be transferred to retained profit. So equals to this value. Okay, and since we have said that this dividend was being paid, so the amount it has to be reduced from here. So minus 30,04,000. So you can see that the balance sheet has been balanced. Okay, so we have been prepared with income statement and the balance sheet, and make sure that our balance sheet should be matched. The total liabilities and equity should be equal to the total assets value. Okay, so now we are going to prepare it with the cash flow statement with us. So it is the profit after tax, whatever we have received. So this will be profit after tax. So this value will be equals to this value. Then depreciation will be so in the income statement it will be reduced, here it will be added. The next accounts payable. So this amount we have not paid, so it is there with us. So unearned revenue, so that is what we have excess with us. So these are the components of cash flow from operations. So we have to sum it up. Equals to sum of all these values. So which comes up to 90 lakhs 8,000. The next thing is purchase of fixed assets. So which we purchased for 5 lakhs minus 5 lakhs. So here there is only one value with investing activity. So let me bring that value. So the next thing is equity raised. So the amount what we brought to start the business is 10 lakhs. Then the loan amount what we received, so what we have, so it is 3,50,000. Then the dividend paid is which we have given it minus 13 lakh 4,000. So the cash flow from financing, it will be sum of all this values. So it will be 46,000. So finally the net change in cash, so this will be equals to the sum of cash flow from operations plus sum of cash flow from investing plus sum of cash flow from financing. So which comes up to 85 lakhs 54,000. So if you compare it, net change in cash value with your cash balance and balance sheet, so it is the same values what we have it. Okay, so this is how you are going to compare it with the each and every financial statements, and you have to bring up the value. So the cash on BOP, that is beginning of period balance. So we don't have anything. So it is 0. Then cash EOP value, that is end of period, will be equals to the net change in cash value plus the opening balance. So this remains as cash ending of period value. Okay. So is that everyone are clear till here? Hope you
Yes, sir.
people have been understood. Yeah, fine. So we'll meet on Friday evening. So I'll share this document with you people after this session. So please refer it and let me know in the next session that if you have any doubt, we can clear it. Thank you all. Have a wonderful time.
Thank you, sir.